It ain't good. The number of home sales continue on their downward trend in the Murrieta Temecula Valley, plummeting really. Wait till you see the numbers. Two Fed officials are warning that rates will remain high for some time, while another Fed president says there should be one more rate hike this year. We're getting into it today. Hi, Jessica Genung here with the Genung team and Real Broker. Welcome if you are new to my channel, and welcome back if you are not. Always appreciate you viewers out there, and I love to hear your thoughts on the Murrieta Valley housing market down below in the comments. Lots to talk about today. After 11 rate hikes since March of last year, the Fed paused their rate hikes at their September meeting. Great, right? Not so fast. Two Fed officials are warning that rates will remain high for quite some time. Cleveland Fed President Loretta Mester said in a speech Monday night that she thinks another interest rate hike is on the table and warned that rates could be held higher for some time. How long the central bank holds rates at heightened levels, she added, will hinge on the strength of the U.S. economy. At this point, I suspect we may need to raise the Fed funds rate once more this year and then hold it there for some time as we accumulate more information on economic developments and assess the effects of the tightening in financial conditions that has already occurred, she said in a speech in Cleveland. That's housing market problem number one. Problem number two is we just received a much hotter than expected jobs report. The number of job openings rose in August, the Labor Department reported on Tuesday, after 3 consecutive months of falling numbers. There were 9.6 million job openings in the month, up from a revised 8.9 million in July, according to a seasonally adjusted figures in the latest job openings and labor turnover survey known as JOLTS. The market took a big hit on this news because investors feared this is signaling to the Fed that the economy is running too hot, and this could trigger the decision to hike rates even further to try and cool the economy. While inflation has dropped since the tightening campaign, it remains around 4%, which is double the Fed's target of 2%. Problem number three is projections in the Fed dot plot show one more rate hike is ahead this year. I don't want to get too technical here and put you to sleep by explaining the dot plot, but to summarize, the most recent dot plot says 7 members think that the Fed's fund rate will stay at its current rate of 5.25 to 5.5 through the end of the year, while 12 think that it's going to go up another quarter point. So as of now, it looks like that we're going to see one more rate hike this year. Lastly, there are indications that we'll only see 2 rate cuts in 2024, down from 4 previously. So sentiment is going in the wrong direction. Several indicators, including yield curve inversions, near record high credit card debt, and the lag effect of the Fed rate hikes, lead to the possibility that a recession is not off the table. One bright side, if we do hit a recession, is that they always come with lower interest rates. But in all honesty, lower interest rates make me very nervous just because I have a sense of what is going to happen in my personal business. We'll get into the trench report now, where I give you a little look into our personal business to help you really get a feel for our local market. Although sales volume is hovering around 4 million nationally, which is the lowest that we've seen since I think that they've been recording it, which is like about 40 years, the real estate market has not come to a standstill, and transactions, they're still happening every day. We have 5 closings scheduled for this month, which is down from the past couple of years, but all things considered, I feel super thankful that our business is moving along. We had 6 homes scheduled to close this month, but 1 canceled due to insurability issues with fire insurance. There have been a lot of changes in the homeowners insurance industry lately in California. That is a video on my to-do list. Add it to the list. Let me know if you're interested in a video discussing homeowners insurance in our area. Moving on, a lot of agents, myself included, are nervous that when rates come down, like if we get back into the 5s, for example, that all hell will break loose like it did in 2020 and 2021 and the beginning of 2022, with lots of multiple offers and everything going over asking. I do think we have the potential for a lot more inventory if rates do come down next year, because I have many clients that I've been working with that want to change their living situation, but the higher interest rates have been a big deterrent. Most of these clients currently own homes and condos, and because prices have increased so rapidly, they need to sell their current home before they can buy their next home. I do anticipate difficulty for these clients when the rates do come down and we're trying to buy and sell at the same time while being up against potentially stronger buyer demand. But this is what we've been helping clients navigate since COVID, and we're up to the challenge, but sometimes we're having to have like these hard truth conversations. I do think that it's certainly easier to be successful purchasing right now, but the reason for that is because of the higher interest rates. That's the trade-off. This market is challenging to say the least. But as I said, on the bright side, and there is a bright side, my current buyer clients are having an easier time getting offers accepted. It's not the huge battle right now for the most part. And it's not too bad for the sellers either. Listings are still selling fairly quickly for the most part when priced right and marketed correctly, and sometimes multiple offers on well-priced properties and what I call cream puff properties, which have the desirable location, they're in excellent condition, and they have desirable features like the pool and the open floor plans and nice yards. Still seeing multiple offers on those types of properties. Let's get into the numbers. Starting with median sales price, and as always with our stats, we're only looking at single family homes for our data for simplicity. Starting with Menifee, and by the way, so we're doing Menifee, Murrieta, and Temecula as always. Median sales price, it's kind of a mixed bag. So Menifee is up just a tad from $567,500 in August to $568,500, up just 0.2%. Year over year, it's up a little bit as well in Menifee. It's up 0.6%, so just a tad. Moving on to Murrieta. Murrieta's is down, and Murrieta's is the only city in my report that's down, but it came down pretty substantially, 2.6%. So in August, median sales price was $685,000, and in September, it went down to $67,500. Year over year, we have a pretty decent increase of 2.9% year over year, which is not too bad considering, you know, we dipped and then came back up. So that just tells you since spring how much our market has increased, because we were down year over year for a little while, but now we're up almost 3% in Murrieta. Temecula had the biggest median sales price increase of 4.5%, so by far the biggest of the three cities. So in August, median sales price was $737,000, and it went up to $770,000. That's a huge jump in 1 month, and as I always say, 1 month does not make a trend. This applies here. I kind of expect this to bounce back down next month, since this month was so particularly big. Year over year, Temecula is up the most as well on the two cities, up 4.8%. So from $735,000 last September to $770,000 this September. Moving on to closed sales, and this is the big story that we've been hearing about. It continues. Sales are plummeting. So starting in Menifee, month over month, sales are down 22.7%. From 132 sales in August to 102 sales in September. Year over year, down 43%. So Menifee year over year has the biggest decrease out of the three cities that we're looking at. Let's look at Murrieta, very similar to Menifee, down 22.6% for closed sales, so 115 a month before in August versus 89 in September. So that is like, you know, for Murrieta to be under 100 closed sales in a month, that's just anemic, quite frankly. Year over year, we're down 29.4%. And then Temecula's is even worse, even down further. Yeah, amazingly. So down 36.7 month over month. So 120 sales in August, only 76 in September. Double digits and a low double digit number, quite frankly. So also down year over year, 25.5% in Temecula. Median days on market, how long is it taking the median home to sell in these three cities, is kind of a mixed bag. So we've got a slight decrease in Menifee, so that's only taking 16 days to sell in September versus it was taking 19 in August, so a little bit of a change there. selling quicker year over year in Menifee as well, 10 days quicker this year. So if you'll remember last year, you know, August, September, that's when the interest rates were really ramping up. So things really kind of froze then. So things, they seem to be moving back pretty quickly lately. Median days on market in Murrieta, it's taking longer to sell. So it's the opposite of Menifee. So it's taking 5 days longer to sell a home month over month in Murrieta. And year over year, again, we're selling quicker than last year. So 25 days to sell a home September of 2022 and 16 days this September to sell a home in Murrieta. Temecula is inching up just a little bit, 2 days month over month. So from 12 days in August to 14 days in September. So a couple days longer, not a whole lot of news there. And then it just continues the trend year over year. So 20 days last September to sell a home and 14 days again. So 6 days quicker to sell a home year over year. The last stat is number of listings, starting with Menifee. And it's a little bit of a mixed bag month over month. Year over year, number of listings is down over 50% in all 3 cities. But month over month, we have some gaining, some losing. So starting with Menifee, number of listings are down 7.8% from 243 in August to 224 in September. And I'm actually not even going to go over the year over year numbers. They're all very similar, you know, down 51 to 54%. So we just know they're way down year over year. So we can move on from that. Number of listings in Murrieta. So opposite from Menifee, which so the listing inventory decreased in Menifee. In Murrieta, the listing inventory is increasing 4%, 8 homes. It's not a whole lot of news there. It's fairly steady, but you know, increasing a tad, 4%. Temecula, we have the biggest move of the 3 cities, and that is a decreasing move. So Temecula, number of listings is down month over month, 11.2%. So from 205 homes to 182 homes. And even though that 11.2%, it sounds like a lot month over month, this is a normal seasonal decline, in my opinion. That wraps up the stats for this month for the Murrieta Temecula Valley housing market. Let me know your thoughts down below in the comments. As always, we're here if you want to talk real estate or have questions. We'll see you next week. Bye.